Today, Bitcoin stabilizes after yesterday's sell-off. Grayscale's Pandl discusses the asset manager's new Bitcoin mini trust, which began trading in the U.S. this morning. And Wyoming Senator Cynthia Lummis discusses her draft bill that would direct the U.S. to buy 1 million Bitcoin over 5 years. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Cryptocurrencies are settling after investors pushed prices lower yesterday. By noon Eastern, Bitcoin inched just slightly higher to $66,361. Ether dipped about 0.6%, just above $3,300, while Solana sat exactly at $180. Now, at the time of these prices, investors were awaiting the latest interest rate decision from the Fed. As anticipated, the central bank decided to keep rates unchanged. 81% of respondents to CNBC's latest Fed survey see the central bank cutting rates for the first time in September, while 86% see a second cut happening in December. Okay, sticking with markets as we take a look at today's top stories. The Grayscale Bitcoin Mini Trust, the crypto asset manager's newest Bitcoin ETF with a much lower fee than GBTC, started trading this morning following SEC approval. I spoke with Pandl, head of research at Grayscale Investments, about the new product, as well as recently launched spot Ether ETFs. A big day for Grayscale with the launch of the Bitcoin Mini Trust. Now, we'll get to more on that in just a bit. But first, taking a look at markets, we're seeing a bit of a rebound for Bitcoin as of around noon Eastern. But yesterday, the cryptocurrency's price retreated to the $66,000 level following Monday's rally when Bitcoin was trading less than $100 away from the $70,000 mark. Now, this week's moves happening as investors were digesting several political developments, including Republican presidential nominee Donald Trump's speech at Bitcoin 2024 in Nashville over the weekend, and looked ahead to central bank meetings happening this week, including the Fed meeting today. Now, we're speaking before the Fed decision, but what would you say is driving crypto markets right now, and what are you paying attention to?
Well, thanks, Talia. I mean, it's really all of those macro trends that are most important. And this is just a huge moment for Bitcoin and for crypto collectively. You have Bitcoin has come to Washington. It's part of the U.S. presidential election debate. Obviously, former President Trump has given a strong embrace to Bitcoin and the industry, but Democratic Party leaders may also be shifting stance. Aspects of the Trump platform may have implications for Bitcoin. Both President Trump and his running mate, J.D. Vance, have in the past called for a weaker dollar to support domestic manufacturing. That's the kind of thing that could also support Bitcoin over time. And as you said, the Fed looks ready to cut interest rates. The Bitcoin competes with the US dollar in international markets. So lower interest rates tend to be negative for the dollar and positive for Bitcoin. So this type of macro economic environment is the reason that people own Bitcoin in the first place. And we're thrilled to see that coming together, thrilled to be able to offer new products in this market environment.
Speaking of new products, back to your new product. Grayscale's Bitcoin Mini Trust started trading today as a spot Bitcoin ETF. It's essentially a spin-off of your Bitcoin ETF, which started trading in January, and offers a lower fee of 0.15%. That's compared to a 1.5% management fee for GBTC holders, which is significantly higher than the charge commanded by many ETF providers, including BlackRock and Fidelity. Now, Grayscale's new ETF now marks the cheapest among spot Bitcoin ETFs. What prompted Grayscale to launch the Bitcoin Mini Trust? What's the hope for this new product?
Well, the motivation is the same motivation that the company has had all along since it got going more than 10 years ago. And the goal is to give U.S. investors the best possible, efficient, regulated, safe access to crypto in their brokerage accounts. And more than 10 years ago, when GBTC got started, that product and that structure was the best possible way to do that for U.S. investors. The crypto industry and the regulatory landscape around it has come a long way since that time. And now we believe that we're able to offer new products, including the BTC product, a low-fee product designed for investors that are new to crypto, looking for a buy and hold instrument. This is going to be a great product for them. And so we're just trying to meet investors wherever they are, meet their needs, and provide a full suite of products for investors to access crypto in a regulated and safe way. And so GBTC will be suitable for some investors, and our new BTC product, I think, suitable for many more. And I would just mention we did exactly the same strategy for Ethereum. We have a long-standing Ethereum product, the Grayscale Ethereum Trust, the largest Ethereum investment vehicle in the world. We also did a spin-off of that product, and so have a low-fee version for Ethereum under ticker ETH. So it couldn't really be simpler and easier for investors to get brokerage account access to crypto, ticker BTC for Bitcoin, ticker ETH for Ethereum. These are going to be great products for investors that are new to the industry.
Now, of course, this month, the first spot Ether ETFs hit the U.S. Grayscale spent years building a trust that holds more than $9 billion worth of Ether. And now the trust has been converted to an ETF and is one of two the firm offers. Now that the SEC cleared the way for these products, there is competition from other asset managers, including BlackRock, Fidelity, and VanEck, as investors can turn to the products with the lowest fees. I'm seeing that across the board, spot Ether ETFs saw negative net flows in their first week amid massive outflows from the Grayscale Ethereum Trust. Does this concern you at all? Do you think interest in these products will increase as time goes on? How would you say Grayscale spot Ether ETFs are performing so far?
I think it's been an excellent launch. So we've seen terrific volumes for these products across the group of 9. If you compare them to the launch of the Bitcoin products back in January, volumes are roughly the same once you adjust for Ethereum's lower market capitalization. So compared to market cap basis, we have basically a similar volume picture as we have seen at the start of the year. As you mentioned, we have seen some outflows collectively across the group. Grayscale had a 100% market share in these products before this last month and has been at this game for more than 10 years. We never expected to maintain that type of market share, as many more traditional financial institutions are now getting involved in offering crypto investment products. That being said, I am thrilled with the products that we are offering to investors and think we are very well placed. The largest product in the market today are Grayscale Ethereum Trust, ticker ETHE. This is the largest AUM, highest volume product in the market. And as you said, the spin-off product, ticker ETH, is going to be a lower cost option, maybe suitable for new investors where buy and hold strategies are most important. So we feel very well placed.
So will Grayscale file applications for other crypto ETFs now that spot Ether ETFs were approved? Grayscale also has a Solana trust. So are there any plans to try and convert that into an ETF? In June, VanEck became the first asset manager to file an application for a spot Solana ETF in the US. 21 Shares became the second issuer to file an application. Where does Grayscale stand in that regard? And what do you think will happen with those applications for spot Solana ETFs now that spot Ether ETFs are trading?
For the last 10 years, Grayscale has worked to provide the best possible crypto investment access products to U.S. investors in the context of the regulatory perimeter that we have in the U.S. today. So as that regulatory framework evolves, our business will evolve with it, as it has over time. I think over time, we will work cooperatively with regulators to see the sensible regulation for the industry, and the framework for all of these assets is going to change. What that looks like over the next several months, we can't be sure.
Now, Pandl also discussed his outlook for GBTC and his message to those concerned about outflows. You'll be able to check out his full interview over at cnbc.com/Crypto World. All right, let's hit our main story. Over the weekend, Wyoming Senator Cynthia Lummis made headlines at Bitcoin 2024 in Nashville when she previewed a bill that would direct the U.S. to build a strategic Bitcoin reserve. That stockpile would be 1 million Bitcoin strong and funded partly by revaluing the Federal Reserve's gold. This morning, we got a draft version of that crypto bill. Crypto World's Tanea McKeel reviewed the draft of the legislation and spoke with Senator Lummis about how it would work and whether she thinks meaningful progress can be made on the bill before the end of this congressional term in January.
Senator, it's wonderful to have you on Crypto World today. Thank you so much for joining us. Let's just kick it off quite simply. Why are you bringing this bill right now?
Well, I'm going to file it now so people have a chance to comment on it. So it's more like a discussion draft. It's a new concept to so many people that I want to get feedback about it between now and January, the end of the year. So I don't expect that it will be taken up this year, but it's definitely something that should be taken up next year.
Well, it is a new concept. There's a lot of interesting stuff in this draft, which your team sent over this morning. So thank you so much for that. You talk about a 5-year period for acquiring these Bitcoins. So it's 1 million Bitcoins, not more than 200,000 a year over 5 years. Tell me about that time frame and the strategy behind it.
Currently, we have over 200,000 Bitcoin that are held as forfeited assets in the asset forfeiture program. So we'd start there. Then we would convert our gold certificates, not our gold, because gold is a hard asset. Bitcoin is a hard asset. We want to be able to back the US dollar with hard assets. But we could use our gold certificates that are held at $42 an ounce. That's the statutory number that was used in the 1970s. Take them up to market, which gold is now around $2,400 an ounce, and then use that market value to convert to US dollars and convert US dollars to Bitcoin. So we would have a diversified asset allocation of hard assets, including gold and including Bitcoin. It not only creates a diversified asset allocation because we already have US dollars and treasuries and foreign currencies. It adds another very hard asset that could be put in cold storage, just the way we hold gold in cold storage, and allow it to grow in market value, backing the US dollar. If we held 1 million Bitcoin for 20 years, we would have enough money to reduce the national debt in half.
You talk about Bitcoin as being a hard asset. Tell me a little bit more about, the track record of Bitcoin so far. You've been very pro crypto for several years now. I think that there are a lot of people out there, even people who like Bitcoin as an investment, are very forward thinking about it, who would push back a little bit and say that, it's only been around for so many years. Maybe the first few of those years may not even be looking at in terms of a track record because of just the newness around it. But compared to something like gold, which we know generally is kind of upward moving over time, Bitcoin is a much more volatile asset. Why is it important for the U.S. economy to be holding Bitcoin specifically compared to something like gold or oil?
And the answer is because Bitcoin is scarce. It is issued every 10 minutes. Miners mine for Satoshis, which are fractions of Bitcoin. And it's produced basically on a mathematical formula until it hits 21 million. So the supply is finite, and its scarcity gives it value like a hard asset like gold. It's immutable, and it holds even more of the characteristics of a hard asset than does the US dollar. And so from its history, which is now 15 years long, it has grown about 55% per year on average. Yes, it has volatility, but over time, that volatility is even going to start to reduce because of ubiquitous adoption of Bitcoin. There's going to be so many nodes all over the world that keep the whole Bitcoin blockchain from beginning until current on each individual computer. So you can't hack it. And that helps also define it as a hard asset.
You said at the top that you don't expect to see this go through this year specifically, but as we're having this conversation over the next 6 months and after that, what kind of pushback do you or feedback even do you expect to see come out of this conversation?
Well, I think it's really important to put it out there so people who don't understand the mechanism I just described to you, they can evaluate it, think about it, validate it. Or if they think it's invalid, if they think it's invalid, let us know. We want this feedback. We think that because the Bitcoin community itself understands the technology, which is a neutral technology, it doesn't have anything to do with politics. We think the Bitcoin community is going to understand this and is going to support this. We think people who understand asset diversification and holding things on balance sheets at their current value as that value changes over time will understand this. We think people who really haven't grasped what Bitcoin is, how much it's used around the world, how many people hold it, and how it holds the characteristics of hard assets like digital gold. We think they're the ones that need to think about this more. So that's why we're going to introduce it and just let people think about it, learn more about it, discuss it, and get us feedback. So in 2025, it will have had enough exposure in the public forum to be ready to go.
Now you'll be able to check out more of that conversation as well over at cnbc.com/crypto world. Okay, that's all for today, but we'll be back again tomorrow and we'll see you then.